Hello and welcome to our today's lesson. We are going to look at something in mathematics. In our previous lessons, we have been looking at matters finance, how to spend your money wisely, how to make profit, how to face losses at some point, how to bargain to get discounted prices, and if we happen to get a good discounted price, we end up saving. We also calculated some savings, and we did not look at how do we earn this money that we are actually spending. So in this particular chapter, we want to look at something called income. We want to look at income before we start spending the same. We need to understand that if you work, we expect that you need to get a reward for the work that you have done. Maybe you as learners, you might argue that you've not started working, but there are various ways in which you can make some cash for yourself. Let us take, for example, you decide to deliver some newspapers in the morning before you even come to school, and you are paid some money after delivery. That will include your income. That is what we are referring as income. So as you move forward towards the workforce, it is important that we understand this concept on income. So in our today's discussion, I would like to give you some guiding questions that will help us to discuss through this particular topic. And the first question would be, what are the different ways? What are the different ways through which people can be paid? That is our first question. And our question number 2, what does it mean what does it mean if you work fewer than full-time hours? Our third question is, what does it mean if you work longer than full-time? And our very last question is, what other types of income can you think of? These are the 4 questions that are going to guide our discussions this morning. Maybe just to go back to the first question. What are ways through which people can be paid? You know, if you are working, at the end of the working period, that is at the end of the day, or during that period, if you are even working during shifts, you can be paid instantly, cash, or your employer can decide to prepare a payroll of all the employees and present it to a financial institutions, maybe a bank, so that you can be paid through a bank transfer. Those are just but 2 of the main ways in which people, through which people can be paid. On to the second question, and the question is, what does it mean if you work fewer than full-time hours? Maybe your full-time is something like 8 hours. The period, your working period lasts 8 hours, and you end up working something like, let us say, 4 hours, 5, or even 6 hours. That means you have worked fewer than your full time. What does it mean? This requires your employee to pay you hourly, on an hourly basis, such that the amount you are paid at the end of the full time, if it is 8 hours, it should be divided by the number of hours so that they get the rate per hour. That rate will be used to calculate the wage that you will get after working the fewer hours than the full time. And there can also be another case where you work extra. You go beyond the full time. If your full time was 8 hours and you end up working something like 12 hours, and even in some cases, you can work double that full time. That is, you can work for 16 hours. In such a case, it is usually said you have worked overtime. And if you work overtime, you need to be compensated. You need to be given a wage equivalent to the duration that you have worked. You cannot be paid for full time only, and yet you have worked double. We will be able, as we continue with this discussion, we'll be able to look at how much do you earn if you work full time, and in this case full time is taken to be normal. And if you happen to work like something like, if your full time was 8 hours and you work something like 12 hours, it means you have worked 1.5 your full time. So you have worked 1.5 the normal duration. And there is a rate attached to that. If you happen to work double, then there is a rate attached to that. And our last question is, what other types of income can you think of? There are other types of income that you can get. Let us take, for example, you earn something like $500 in a week. Maybe you're working in a cinema selling tickets, or you're auctioning somewhere on the streets, and you are paid $500 in a week. The employer can decide to motivate you by introducing something extra, such that you are told, if you are used to selling 10 tickets in a day, you are told, if this time round you will sell 15 tickets, for the extra 5 tickets, you will earn something more on top of what you have been earning in a week. And the normal earning in that particular week, it is usually referred to as the base salary or earnings. Base earnings. So there is something more that you will make on top of this. And that amount that you earn extra is given a special term called commission. It is given a special term called commission. We have already looked at how to express given quantities and amounts in form of percentages, fractions, and even decimals. So basically, commissions are expressed as percentages. They are expressed as percentages, and as we continue with this particular lesson, we will deal with it deeper. So having looked at these 4 questions, I would want us now to move on and look at the methods of payment. Methods of payment. When we were dealing with our second question, I tried to explain to you a scenario whereby you have worked lesser hours than the full time, than the required duration. I also explained that we need to take the total amount that you should earn for the full time, divide by the duration for the full time, so that we get the rate per hour, hourly rate, so that we multiply by the number of hours that you have worked to get what you're supposed to earn in those fewer hours. So when payments are made, or when you make some earnings based on the hourly ratings, we call that wages. So the first method is called wages. As I've said, wages are basically earnings. Paid to an employee based on the hourly rate. Based on the hourly rate. This basically means you are paid a certain amount per hour worked. That is what we mean by wages. The second method is what we call commission. I had introduced it. Commission. These are basically for the sales people. Commissions are basically for the sales people to encourage them to make more sales. Actually, commissions are there to motivate salespeople so that they become aggressive enough to make more sales. Because the more sales they make, the higher the amount they earn. So we can say commissions are earnings for salespersons. Based on a certain percentage of the total sales. You are given a certain percentage of the total sales. And in some cases, you can only earn the commission alone. Let us take, for example, you are a broker and you are given a vehicle to sell, and you are told you will earn 5% commission on the selling price of that particular vehicle. That commission is what you will earn. But if you are employed and you have another amount that you are paid, whether you make the sales or not, that amount is what I referred to as the base earnings. So commissions are earnings for salespersons based on a certain percentage of the total sales of the goods. Sometimes it can be goods, of the goods or services sold. We can move on and look at a third method. That is what we call salary. When we talk about the salary, it comes in two forms. The first is where you are given a certain fixed amount at the end of every month, or there is a fixed amount that you are supposed to be given at the end of a year, or we have a certain fixed amount that you are supposed to earn at the end of the year, but then your employer decides to divide by the number of months so that every month you earn a certain fixed amount. It doesn't change whether the number of days in a month reduces or increases. We know that some months have 28 days, whereas others can have as high as 30 or 31 days. So you will just earn that fixed amount. We can say that this salary now is an employee's. An employee's fixed agreed yearly or monthly or even weekly amount. or we can call it income. Income. And this is a special case because even if something happens and maybe you're working in a factory and on that day you don't go to work, a day, 2, or even 3 you don't go to work, you will still earn that fixed amount. Or even if you work fewer hours, maybe you're operating a machine and this machine breaks down. That means you are no longer going to work, as it is going to be fixed. Your production will be low, but still you will be able to earn your salary, that fixed amount that you have agreed to be paid. That income, yearly, monthly, or even weekly, you will have to be given. The fourth is what we call fees. This is a special method of income made by people like lawyers, doctors, and even some consultants. You are paid income based on the rate that you have already fixed. We can say you are paid based on the charges you set. Let us take, for example, a doctor. A doctor can decide to set consultation fee to be $30. So if you are going to the doctor, you just know that the consultation fee is $30. There is no bargaining. That is what the doctor will make. That is what the doctor will make. So the doctor's income will be based on that set charges that he or she has already laid down. Having looked at these 4 methods of payment, there are some terms that accompany these particular methods. And it is prudent that we also look at those methods before we move on to calculations. So this is what we call the terminologies that are used when we are calculating income. The first term that we are going to look at in this session is what we call gross income. When we are talking about gross income, we are actually talking about the income that someone should get before deductions are made. And when I talk about deductions, we know that governments have some taxes. These taxes are supposed to be deducted from people's income, so that the government can be able to run and function, to pay its employees, and even pay the bills. So that income that you are supposed to get before deductions are made is what we are calling gross income, which is actually the total income before deductions are made. Before deductions are made or effected. The second, maybe just to mention, some of these deductions can be like income tax, some union fees or membership, etc. The second term that we should look at is what we call deductions. Let us deal with these deductions so that we can understand better. Deductions, in simple terms, it means money deducted from your income before you are paid. Before you are paid. Money deducted from your income before you are paid. And I've already stated the examples. These are taxes, and any other deduction that can be made on your income before you are paid. The third term arises from these two. If you have the gross income and deductions have been made, the remaining amount that you end up with, what is the term given to that? It is actually called net income. Net income. I know by now, having talked about the two, you know what this particular term means. This is the income. You remain with. You remain with after deductions. After deductions have been effected. And actually we can have an expression to combine the three. We can have an expression to combine the three, whereby for us to get net income, this is actually gross income minus total deductions. Minus all the deductions. That is when we get the net income. We also talked about hourly mode of payment. Before we continue with other concepts, let us now look at how that hourly mode of payment can be effected. Payments by hourly rate. Payments by hourly rate. If you are paid by this particular rate, you will be paid a certain amount for every hour that you have worked. Payment of a certain amount per hour. And this can be for a normal working hours. Because when we start factoring in the issue of extra time, you are working out of the normal time, then you'll discover that these rates will tend to change. And these changes are usually positive. What do I mean? Is that the rates tend to increase as you cross the normal hour boundary. And the reason for that is to encourage the employees to work harder and even work beyond their normal working durations. A normal working duration in a week is usually 38 hours. The normal working time is usually 38 hours in a week, in a single week. And remember, in a year, we have approximately 52 weeks. We have 52 weeks. It is important to understand these concepts. So whether you are being paid hourly, weekly, monthly, or even annually, you can be able to know the amount of income based on those specifications. And as I had mentioned, that if you work overtime, the rates may be different. The rates may be different. So we have three categories. The first category is what we call normal. Normal. When you are working and you are paid hourly, maybe you are paid $15 per hour, then the rates will be the rates within the normal working hours will remain at $15. Every hour you are paid $15. So that if you work less, you will earn less. They will just take that rate of $15 per hour, then they multiply by the number of hours that you have worked to get the income that will go home with. So that rate will be 1. It is a constant 1 multiplied by the normal rate that you have in that particular institution. Sometimes we can also have a different rate. Maybe the normal working hours are 8. Then an employee works 12 hours. You will discover that there is an extra 4 hours. These 4 hours are actually a half of the normal working hours. So that brings in the idea of time and a half. The second category is what we call time and a half. The payment will be based on that. Remember, in the first category we had a constant 1, but since this particular time is increasing, it has increased by a half. This a half will be factored in, and for the extra 4 hours, or that a half the duration, will bring in this particular factor of 1.5. That is basically 1.5 times the normal rate. So, like the example that I've just used, if you worked 4 extra hours, those extra hours will be paid at a rate of 1.5 the normal one. If you are being paid $15 per hour, those extra hours you are going to be paid 1.5 over 15 is basically 22.5. There you will have a new rate of 22.5. And the last category is what we call double time. Double time. Both time and a half and double time, they are actually what we call overtime. You have worked something overtime. So the same factor that was used here will be affected by, this was time and a half, but this one is double. You can guess the factor that we are going to have here, which is actually 2 times the normal. We could even have other categories. Category number 4, where you have twice and a half or even thrice. But that cannot be the case, because by the time you work the double time, if you are working 8 hours, double of that is 16 hours. A normal human being, by then, you will be tired and you cannot be able to work effectively. So the maximum is duration that is encouraged can be double, but you cannot go beyond that. You cannot go beyond that. So having looked at these 3 categories, I want us now to look at examples We look at examples that will help us look at the various methods of payments. We also apply the terms that we have just learned, the gross income, the deductions, and the net income, together with these three categories of hourly payments, so that we can understand the concept better. And our first example is if Tao earns $570 for 38 hours work, we need to calculate the first is hourly rate of pay. Hourly rate of pay. The hourly rate of pay. This 38 hours is equivalent to $570. So these are the number of hours worked in a week. So this particular person called Itao earns $570 in a week. That is 38 hours. We want to know, this is basically the normal rate of pay per hour. The normal rate of pay per hour. And this means for us to get the normal rate, we need to take the total income divided by the number of hours worked. The number of hours worked. And our total income, we are told, is actually $570. The number of hours are 38. 38 hours. This will give us a rate of $15 per hour. The normal rate will be $15 per hour. For every hour, Tao earns $15. Our second question is for us to calculate the time and a half rate. The time and a half rate. For us to get the time and a half, I had already given you the relationship. This is basically the rate will be at 1.5 multiplied by the normal. normal rate, and this will be 1.5 multiplied by $15, giving us $22.5 per hour. And our next question is for us to calculate double time rate. And this, from the three categories, this was the third category. This will be double the normal rate, double the normal rate. And in this case, the normal rate we had calculated as $15 per hour. So if we double that, we are going to have $30 per hour. That will be the rate if they will be calculating at double. Our last question requires us to calculate annual income. Annual income, given that tower works (52) weeks a year. And 38 hours per week. We need to calculate if he's just going to work 38 hours in a week. There is no overtime. So if there isn't overtime, that issue of time and a half double income, double rate does not come in. This person is just working during the normal working period. What does it mean? Tao basically earns an income of $570 in a week. So that means 1 week is equivalent to $570. What about 52 weeks? How much will Tao earn in a year, which is approximately 52 weeks? This means we are going to have 52 weeks multiplied by the income per week, the salary per week, that is, which is 570. You divide by a week, so that this week and week will cancel. This will give us 52 multiplied by $570, and this will give us $29,640. Tao's annual income will be $29,640 Let's look at another example. We have a person called Malcolm. This particular person earns $1,090 a week and has annual deductions. Annual deductions of $19,838. We are required to calculate his annual net income. Remember, when we are talking about net income, that is basically the difference between gross income and the deductions. We have been given the deductions of 19,838, and we have a salary of $1,090 per week. So we need to get the gross income annually, the annual gross income, before we effect the deductions, so that we can end up with the net income. So remember, we have those three terminologies that we have already learned: the gross income, the deductions, and the net income. So we need to get the gross annual income. That is the gross income in a year. And the person earns $1,090 in a week. And remember, a year has 52 weeks. So that will be multiplied by the earnings in a week, which will actually give us $56,680 before deductions. These deductions, they have been put together. The taxes and what have you, all of them, they are in there. So for us to get net annual income, this should be the difference between gross income and the deductions, total deductions. Total annual deductions. Total annual deductions. We already have our gross annual income, which is actually $56,680, and the total annual deductions are to the tune of $19,838. 838. So when we calculate that, we actually get $36,842. This is what Malcolm will make in a year. This is the income in a year. And lastly, this last example requires us to make some kind of comparison. Which is better? The question is for us to identify a better deal. Which is better? $5,600 per month, or $67,000 per year. Which is better? Are we just going to take it at the face value? This is larger, so we pick this one and forego this, or we need to make some comparisons? Mathematicians will have to make comparisons based on the calculations and the numbers they will get after carrying out thorough calculations. And it is actually said that numbers don't lie. So in these particular situations, we can compare these two, monthly or annually. If we decide to compare the monthly, we will still be able to get the larger figure. So the first way in which we can compare this is monthly comparison. We can take the first case, the first offer. The first offer is $5,600 per month. And the second is actually 67,000 per year. We need to express this monthly so that we can know how much we'll be making in a month, so that we can compare them. Remember, a year has 12 months. So if we divided this by 12 months, this will actually give us you can use your calculator to do that. This will give us something to the tune of 5,583.30. That is rounded off to 2 decimal places per month. So when you compare these two figures, you'll discover that the first offer is a better offer, because this is 5,600 and this is 5,580 something. So there is a difference. So the best offer is the first one. Per month. You can do the comparisons yearly such that you multiply this by 12 so that you can also get to see the picture annually and you can pick a better offer. But still with this, I'm sure even if you did calculate yearly, you will discover that this first offer will still be the best offer for you. Having looked at income, those various methods of payment, the terms associated with those payments, and the 3 examples that we have looked at, I'm really hoping that you have understood and you have enjoyed the lesson. I'm inviting you to my next lesson, where we will be looking at how to find gross and net income. How to find gross and net income. This one we've just been using what we have already been given. Welcome.